Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world every Friday at 12:30 Eastern. Well, it's just me today, at least for the first little bit of the show anyway. Jacqueline is over in Hong Kong already. We'll be joining her next weekend for Consensus. And Gerald is on his way. He was at the passport office trying to get his passport figured out for when we do actually travel to Hong Kong next week. So for the first few minutes, you got me. But we do have some exciting guests on the show for you today. We have Miles Jennings back on with us. He does have a working internet connection today. So we're excited to talk to him about all things crypto policy, Senate Ag, passing the Clarity Act through committee, CFTC, SEC partnership, all of that fun stuff. We're also going to have Charlie Gasparino, veteran financial journalist and my former colleague at Fox Business. He will join us to break down the Kevin Warsh nomination at the Fed. And we'll wrap up the hour with MoonPay's Chief Legal Officer and Chief Administrative Officer, Caroline Pham, who got some shout outs in yesterday's speech by Chairman Mike Seelig over at the CFTC. It was his inaugural speech as chairman. We'll chat with her about the agencies joining forces and joining forces on Project Crypto, that is, and the other initiatives her former agency is doing while we wait for the Clarity Act to get through the full Senate. But in the meantime, let's breeze through some of these top stories. We'll start with the Senate Agriculture Committee advancing the crypto market structure out of committee, Clarity Act, its portion of the Clarity Act out of committee Thursday morning, moving it one step closer to the Senate floor. Now they're calling this the Digital Commodity Intermediaries Act. It passed 12-11 on party lines. So 12 Republicans voting in favor, 11 Democrats. The Republicans had it, so it passed through committee on party lines. It would give the CFTC new authority over digital assets, set a legal definition for digital commodities, and create rules for spot market intermediaries, including consumer protections. Now, all Democrats, as I mentioned, opposed the measure. They cited ethics concerns tied to President Trump's crypto investments. We got quite a few shout outs from Senator Cory Booker of New Jersey, concerning the White House's tie-ups in crypto. He called President Trump the most corrupt president in our history because of his crypto involvements. Some other sticking points for the Dems were proposed amendments to ban public officials, not just President Trump, but Congress people and the vice president from owning crypto, and also addressing foreign participation, in at least tying up some of those loopholes where potential terrorists and cartels can target U.S. markets. They were really concerned about those too. So we did hear a lot about that from the Democrats in the markup yesterday. Chairman Job Moosman called the vote a critical step and says he hopes it will build momentum in the Senate as we go. He did tell me after the markup, I caught him in a gaggle afterwards, and he said he was disappointed the Dems didn't come on board, but he is excited to continue those bipartisan discussions. And the Banking Committee has yet to schedule its own vote on the markup. We'll be talking about that with Miles in just a few minutes' time. Let's get on to the second story of the week, which is SEC Chairman Paul Atkins and new CFTC Chairman Mike Seelig say they're now working together to provide clarity for crypto markets by making Project Crypto, which was originally an SEC initiative, a joint agency initiative. Seelig was sworn in last month, and he outlined a joint approach to define which digital assets are securities and which fall under CFTC oversight. He called it the beginning of a new chapter for the CFTC and promised rules on tokenized collateral, retail leverage trading, and prediction markets. Atkins said the goal is to harmonize standards, reduce frictions, and give market confidence while Congress works on crypto legislation. Leading cryptocurrencies like Bitcoin and Ether will remain under the CFTC, while tokenized securities will stay under the SEC. I did ask Chairman Paul Atkins in our fireside whether there was any update on that innovation exemption we've all been waiting for. He said not at the moment. He did say it would be out by the end of January in an interview he did at the end of last year. I kind of said, there's a couple more days left in January. Do you think we'll see it, by the end of the month? And he said, the government shutdown really did have an effect on that timeline. He did give us a scope as to kind of what that would cover. Didn't give too many details as to when we might see it, but here's hoping it'll be soon. Third story of the day is Tether. It's officially launching USAT, which is its its American version of USDT, which is its the biggest stable coin in the market in the world, actually. But its first federally regulated US focused stable coin is USAT. It's a dollar-backed token. It's issued through Anchorage Digital and Cantor Fitzgerald. And Cantor is the reserve custodian, and it aims to provide a compliant alternative to USDT for US users. And the launch follows Congress passing the Genius Act, which it did last July. And it's a federal framework for stablecoin issuance. Traditional financial institutions and major exchanges are already coming out in support of USAT and signaling growing mainstream adoption. And elsewhere in crypto, an Ethereum whale. I'm not going to read that part because I did not mean to put that in there. Anyway, we're moving on to the last story of the big headline, I think, of today really was Kevin Warsh was nominated to the Fed chair position. It's been a long time coming. President Trump has really been teasing a name for a long time. It's been 2 months. He said, I'll have a name to you by the end of January. And he actually did come through on that timeline. So this morning, Kevin Warsh was the name. He's going to be the next, at least the nominee, to be the next chairman of the Federal Reserve when Chairman Powell's nomination is up in May. Warsh is a former Fed governor himself. He was on the board of directors from 2006 to 2011. He would replace Jerome Powell in May, as I said. Trump has repeatedly criticized Powell over his interest rates. Warsh is known to be a Fed critic as well, who favors lower rates but is fiscally moderate. And Trump has praised him as one of the great Fed chairmen in the Truth Social post. And Warsh was selected from a short list of 4 finalists, including Kevin Hassett, Christopher Waller, and Rick Reeder from BlackRock. So before we get into the Fed, it was another big week for crypto policy here in DC, and what many in the industry are considering a major step forward for market structure progress in the Senate. The Senate Ag Committee passed its portion of the Clarity Act out on a party line vote of 12 to 11, meaning no Democrats voted in favor, but the text has made it over that initial hurdle. Joining us now to discuss live from A16Z's, not offices, his own home office, is head of policy and general counsel, Miles Jennings. Miles, welcome back to the show.
Thank you for having me. Yeah, and this isn't quite A16Z's digs, but it'll do for now.
It looks great to me. I got to get your take on the Fed chair pick, Miles. What do you think of Kevin Warsh?
Yeah, I mean, I think he's a great pick. As you were just saying, I think fiscally moderate, and I think that is good. I think the last thing markets need right now is more volatility. So I think we're very excited about the pick.
Mm-hmm, mm-hmm. Well, let's get to the markup. So it was a totally partisan markup. Does that concern you about the Senate Banking Committee's prospects for getting Dem buy-in when they finally hold their own markup?
No, it doesn't. I mean, I think, I think if you look past what the, actual vote tally was, it's very clear. A lot of statements were made by a lot of the senators that are very indicative that they want to get this done. And that's also what's going on, behind closed doors, right? Every signal that we're getting is that, there's a deal to be had here. And that there is solutions for all of the problems that are out there. So I think when push comes to shove, at the end of the day, I think we're going to be able to get a 60 votes at least in the Senate, and actually far more than that.
Okay, that's optimistic. The dust has settled a little bit. I think even more so than when we had you on the show last week. So where do things stand now? A couple weeks on from that postponed markup. We do have a meeting on Monday between the White House and the banks and the crypto industry on yield. So there seems to be some motion there. But I know you're also invested on the tokenized security part of things, Section 505, we mentioned briefly last week. What's A16 honing in on the most as these talks are ongoing?
Yeah, so I think obviously we stand with Coinbase on the yield issue and are kind of offering support there, but letting them and others take the lead, and then we're focused on continuing to work with the Senate banking staff as well as Democrats, both on that committee as well as on the Ag committee, to try and get all of the remaining issues resolved. I think if you look at it, the time that we now have is a good thing, because ultimately there were a lot of provisions in the bill that no one had seen, and it's giving industry and a lot of different stakeholders an opportunity to voice how they think that these provisions should work out. 505 is a great example, right, where a lot of different views on what that language meant. And so it's better to have these things talked about in the open and actually have progress on what the right direction is for them, as opposed to passing a bill quickly and then winding up with something that maybe wasn't well designed or well thought through. So I think ultimately right now, I think there's a lot of progress being made on both sides of the aisle, and I think that generally issues are getting ticked off, and there are still issues remaining, but I think we're getting closer and closer every day.
And where do you think the controversy around Section 505 specifically stands, and where do you think it came from? I know you had some thoughts on it. We can talk about whether those concerns were justified, but as of now, do you still see it as a pressing issue?
Yeah, I wouldn't. I mean, I think it's an issue that needs to get resolved because everyone needs to get comfortable with what is in the bill. I think both sides have fair perspective. If you read the text and you're saying, okay, well, this must be in here for some reason. What is that reason? And it might be hard to accept that it's just restatement of the law. Why would they restate the law? But there's a lot of sections in the bill that actually just restate existing law. So I think it's generally consistent with that. But at the same time, it's not a unreasonable ask to want the text in the bill to mean something. And if that is the case, then do we really want this additional text, which could be read to constrain the SEC's authority? Ultimately, I think that we'll get to a good resolution there, because I don't think anyone is trying to limit the SEC's authority to grant exemptive relief. That would be far outside the scope of what the bill is intended to do. So I think that we'll be able to resolve that key complaint, and I think that will mean that this issue is put to bed.
And we saw some guidance come out from the SEC on tokenized securities a couple days ago. I'm sure
Yeah.
everyone in the industry was a little bit relieved to see, at least some direction there, before we get that innovation exemption from the SEC, if we ever get that exemption from the SEC.
No, that's right, and I think the and that release was great, and I think it was very clear in how it set things up, but it also did make the point, right, that just because you tokenize a security doesn't mean that it's no longer a security, right? And so I think that was some of the concern around 505, around the statements in there in that text. But I think where we're currently at, I think that it's going to be a non-issue, and ultimately it's just one more thing that comes up over the course of the long history of getting this bill passed that will ultimately no one's going to remember.
You mentioned you guys stand with Coinbase on the yield issue, or you're aligned at least on some of their worries about it. Are you going to be in the room at the White House on Monday? I know a few of the crypto native folks are, some of the banking industry folks. It's going to be a roundtable discussion, from what I understand, taking place at the White House on Monday.
Yeah, we're not going to be attending. We're offering support to Coinbase, letting them take the lead on this one, and I think they're doing a good job of trying to find the right solutions, and they're being constructive. So I think from our perspective, we hope this gets done. But there are a lot of different issues that are in the bill that need to get resolved, and so we're hoping to focus on other ones.
Why is it important, in your view, that the legislation that we currently have is promoting decentralization? And do you think that the Clarity Act does a good job of achieving this currently where it stands now?
Yeah, so I think I think that it does a really good job of pushing it forward, and I think that is one of the elements of this bill that makes it unlike any other bill that's exists in the world today, and it's the one that really kind of makes this bill more about building networks as opposed to building companies, right? And I think that is the core benefit and the core kind of promise of crypto, right, is that you can build these networks, social networks, financial networks, all of these different things that are not controlled by any individual. And we don't have anything in the U.S. legislative library, right, that basically allows or permits or enables people to do those things, puts parameters that creates a level playing field for entrepreneurs to do so. And that's what this bill does. And it's the only one in the U.S., only one in the world that does it. We're very excited about that element. And I think if you were agnostic about or just didn't kind of take on the decentralization challenge, what you would end up getting is centralization. And that's how all of our existing legislation works. And that means that you end up with a bunch of intermediated networks where a lot of value is extracted. So decentralization has a really significant cost. And if you don't provide some benefit to entrepreneurs for actually embracing it, then they're just not going to, because why would you incur the cost if there is no, actual benefit from a regulatory perspective? So we're really excited about it. I think that, it obviously there's going to be a lot of rulemaking that's done, but it's moving in the right direction, and we're really excited about what that means for entrepreneurs.
Well, with that, I think we have Gerald to bring in. He has made it back from the hole that is the passport office.
Yeah, reporting live from frozen DC. It turns out, yeah, Miles, this week I was the one with technical difficulties. So glad to.
Fair enough.
Good to see you again. Yeah.
Good to see you too.
Yeah, we're discussing the Clarity Act and Senate Ag passing the portion of the bill through committee yesterday. But it was a busy day on the Hill yesterday, Gerald. Saw you in the audience at CFTC SEC.
Yeah, it was exciting. Great job moderating. It was a great discussion. I think we saw like a lot of very bullish comments from both Atkins and new Chair Seelig. Miles, what did you think about, like, what were some of the things that really stuck with you about the tone of that day yesterday?
Yeah, I mean, just incredible optimism. It's kind of hard to imagine, right? If where we are today, just looking back 2 years from now, right? I mean, we now have both chairs of these agencies not just talking about the technology, but actually clearly understanding what the benefits of the technology are and what it could mean for financial markets. And that was unfathomable 2 years ago, right? So I think it's incredibly optimistic. I was looking through Chairman Seelig's opening remarks. This is kind of one of the first times that we've really heard him kind of lay everything out. And the magnitude of his agenda is just incredible, right? I mean, he's taking on perpetuals in the United States, event contracts like prediction markets, all of that stuff he's going to tackle. And I mean, it's just amazing. And I think it promises a lot of benefits for entrepreneurs being able to move into this space where there's going to be a lot of change and a lot of introduction of new technologies that are hopefully going to revolutionize markets for the better.
Yeah.
Absolutely.
I did ask both chairmen whether they thought, because they're regulators, right? And I think a lot of opinion in the industry is, while we're waiting on legislation, a lot can be done at the agency in the meantime. And as case in point from Seelig's speech yesterday, they're rolling out all these initiatives. Are you of the opinion too, Miles, that in the absence of legislation, we can get a lot done in the meantime, but is legislation really the core of what's going to drive the future of this industry forward? Do we need legislation, or is good administrative policy enough?
So I think what the agencies can do is great. They can do a lot of stuff that is going to be very effective in helping move markets on chain, right? So the SEC can be very helpful in kind of the innovation exemption, moving tokenized securities on chain, and that is great, and that is a huge portion of what this industry can do and what it can be. Same thing on the CFTC side, right? Event contract markets, perpetuals, all of this stuff, moving them on chain, making it possible for those chains to kind of operate and facilitate trading in those assets. So I think that is all great. The problem is that without market structure, we can't actually have a regulatory framework for those underlying blockchains and the smart contract protocols that kind of enable all this type of trading. And if we don't have that, then we're taking on a lot of risk, right, of allowing assets to move on to these systems. And so from our perspective, you can't not have market structure. The same reason, right, that in the wake of, Genius passing the stablecoin bill, right, that puts an enormous amount of pressure to get market structure done, because we're now going to have trillions of dollars of stablecoins moving on blockchain rails that, if we don't pass market structure, are going to be unregulated, because the regulatory agencies don't have authority currently over how those things, function and how entrepreneurs can bring them to market. So I think it's fundamentally important. There's really no way to address all of the things that you can address in legislation. And then just looking at it from a long-term perspective, right? We need a solid foundation here for an industry to be built on top of. We've seen what not having that has done over the course of the last 10 years and how that has impeded innovation. So legislation is the way to establish that foundation. And I think that, we're close to that. But at the same time, right, we really applaud both agencies, because we think that they're doing incredibly effective work. And we're really excited now that Chairman Seelig's in to see what he can do.
Yeah, Miles, I'm curious on that point about sort of permanence and regulatory predictability. There was a big announcement yesterday is as part of that summit that the agencies are going to work on an interagency MOU, right? And so I think you and I as attorneys have varying opinions of how effective MOUs are. We would love definitive agreements, but I'm curious, is there's a lot of action on the agency side, and market structure is a huge key to sort of permanent clarity for the industry. But how close could we get through actions like the MOU and this interagency cooperation to things that are hard to reverse? Or do you think that in 2028, another agency head could easily kind of come in and undo all of this without clarity?
Well, yeah, I mean, I think that I think without clarity, there is definitely risk that anything that is done today or by this administration can be undone by the next one, right? And that's going to be the case without legislation. Now, obviously, you can try and do as much work as you can and make sure that it's done properly. So, doing the economic analysis, actually showing the benefits of this technology, that will then make it very hard for someone to undo it in the future and say none of that stuff actually was true. But at the same time, why would we want to take that risk, right? Why would we want to open up the door to a future administration that doesn't has no regard for the law? So I think we really got to continue to push here. And at the same time, I think they're going to do the work. I think that they're not going to take extreme approaches and everything like that. It's going to be principled. So at the same time, we are very optimistic that if they are challenged in court, that they will be able to prevail.
I'm going to ask you a A16Z question, Miles, maybe a
Sure.
little away from crypto policy, but I know it all fits into the same Venn diagram at the end of the day. But how has the current climate for startups and fundraising in the space right now? Or are they kind of waiting on the sidelines to see what happens with clarity? Because it's kind of a stop and start. Like, aren't they at this time? What are they saying? How are your clients feeling?
Yeah, so I think that the fundraising environment is good in terms of I think that there are a lot of VCs out there looking to deploy capital, and for good entrepreneurs that are out there, I think that there are plenty of opportunities. I think the bigger problem that we see on the venture side of things is the lack of entrepreneurs entering the space, right? I think people, right now, if you're coming out of college and you're looking around at what industry you want to go work in, right? Do you want to go in one where maybe there is certainly a ton of opportunity, right? With financial markets moving on chain, that alone is going to be trillions and trillions of dollars of opportunity. But at the same time, right, you don't know whether or not any of this stuff is permanent and whether or not you're building on, a foundation of sand. And so I think that's, again, right, one of the reasons why we think market structure is so important, because it's a signal to entrepreneurs that actually this is a solid foundation. The rules are very clear now. You can compete on a level playing field, and because of that, this is where you should be wanting to build. So that's really, I think, one of the areas where we're really kind of seeing some of the lingering effects of the regulatory uncertainty in this space, and are one of the reasons why we're so so behind market structure getting done.
Yeah, Miles, on that note, I heard you say earlier in the show that founders should be rewarded for embracing decentralization if that's the path that they choose. What I've heard from some other investors deploying capital in the space is that they're very excited about this like fintech adjacent category that's kind of emerging, right? And it's been around for a long time, but with the clarity coming for things like payments and maybe agentic payments and stable coins, does it change your approach at all at Andreessen about looking at more of like say like a Uniswap type protocol or project versus looking more into these, like, we know where these stand right now from a regulatory perspective, and so we're very excited about this space in the near term? Or how does that impact your thesis?
Yeah, well, so I think that generally speaking, I think right now the market structure legislation is one of the huge benefits that it provides is, right, it does provide a, very clear safe harbor for projects that establish, that they are not controlled, right? So protocols like Uniswap, that where no one kind of controls how it functions, where no one, has special permissions that can kick people off of it, right? That is incentivized within the bill. And I think that is great, because that means that we're going to get a lot more of these, networks that function like public infrastructure as opposed to proprietary systems. I think on the other side, right, I think now that we do have a lot of, movement in the financial system space, right, a lot of tokenized securities coming on chain, things like that, it's natural that we're going to have this semi approach where you have kind of an intermediary, kind of don't. But at the end of the day, I think that that's going to be more, my view is that that's going to be more transitory towards open and permissionless systems, and that's certainly the thing that we're fighting for. But I think that there's going to be a lot of space there. For instance, it's not hard to imagine that in a future world where crypto is much more broadly adopted, that there's going to be a lot of people that do not want to self custody and instead would rather trade crypto or hold their crypto assets through someone like a Fidelity. And so I think that there's going to be a lot of room for those players, right, to basically offer similar services to what they're doing now, but expand them to cover a lot of stuff in the crypto space, all using DeFi rails, which will make their businesses much more efficient.
On that note, I have one follow-up about sort of tokenization. We've been talking a lot about permission versus permissionless sort of chains, and you mentioned sort of the quasi-intermediary model, right? How are you looking at, whether it's through your portfolio companies or other sort of L1s out there, permissionless protocols fitting into these new kind of tokenization structures? It seems like there are a lot of opportunities for maybe instant settlement, collateral. We've heard a lot about that. But how do you think sort of legacy kind of decentralized L1s are going to fit into this new model where there are needs for sort of maybe off-chain interactions or sort of walled gardens, viewer keys, that kind of stuff?
Yeah, so I mean, I think that there's certainly room for the walled garden approach, and I think that there are a lot of businesses that are pursuing that, and that makes a lot of sense. I think our view of what the space can really offer, right, is the open network, and the permissionlessness. So if we don't get to a world where these assets are able to trade on permissionless systems, then you're going to be significantly constraining what those networks reach are, and at the same time, you're going to be giving someone the ability to act as a gatekeeper, so potentially enabling that person to extract value to the detriment of the users. So our long-term goal is certainly to push everything out towards being more open, towards permissionless, and I think open systems do win in the long run. But I think that it's natural for a lot of businesses to be moving in here, and I think that there are a lot of great services that they can provide in terms of onboarding the GSIPs and all of these financial institutions that now want to get involved in crypto and are a little bit hesitant to think about how do I actually build on a totally permissionless protocol like something like Ethereum, right?
All right, Matt, Miles, before we let you go, got to ask. So we got Senate Ag done, Senate Banking maybe coming up in the next couple of weeks or so, but what do you think this means for the overall timeline of passing the bill this year?
And no shutdown, maybe? No shutdown, maybe?
I can't make any predictions about the shutdown. So I'll say if there is no shutdown, right, we feel very optimistic. We think it's more likely than not that this is going to get done. I think everyone that's around the table, Democrats, Republicans, industry, right, all wants to see this happen. And, even the agencies are really pushing as well. So I think where there's a will, there's a way. And I think that means that we are going to get it done, hopefully before the summer.
Great. Okay. All right. Well, Miles, thank you so much for joining us today. And we'll
so much.
Have you back soon.
Thanks, Miles.
Thanks.
All right. I'm glad his internet was working today.
Yeah, that went well. You can't see it, but I'm literally still wearing my snow boots. So if you're if you're in DC, hopefully your Wi-Fi is working too.
It is a mess. DC, honestly, New York's not great, but I think at least they plow the roads better than they do in DC.
It's rough. Yeah, I've been dodging backhoes for the last half hour. So we're working on it. We're a real city, I promise. But yeah, it's a fun time here.
Yeah. Well, we're gonna bring Charlie Gasparino in just a few minutes, but I think the biggest news of the day was possibly Fed Chair Kevin Warsh, right? I mean, I'm going to bring this up with Charlie, but I remember this was back during the nomination process, and his name was floated for a little while for Treasury Secretary.
Yeah,
and it was the battle between Lutnick and Bessent, and then it was like, oh, maybe Kevin Warsh will be up in the battle too. And then it was like, no, Kevin Warsh is going to be the next Fed chair. Trump is reserving him for Fed chair. So I remember hearing that, and I was like, okay, so he's always going to have that sort of nod for chair. But then his name sort of fell off the list, and then it came back up in recent days. Rick Reeder was up there from BlackRock. I think Kevin Hassett was, sort of once Trump said, "I like you where you are," that was kind of it, right?
Yeah, I feel like we go through a little bit of this like apprentice style
It totally is. Yeah.
nomination process. Yeah, so we talked obviously to Governor Waller earlier on in the year. I know his name was being floated around, and Warsh. I'm glad we're getting to cover this still, because there's a lot to kind of dig in through here, and we'll hop into it with Charlie. But he's a Bush nom. Kind of classic sort of Republican guy, known more as a hawk. And so is obviously, I think one of the headlines I saw was like a renewed or refreshed, kind of rebranded Kevin Warsh is the Fed chair pick. So very interesting to see, how this process goes.
Yeah. Well, I think we have a clip of Kevin Warsh actually talking about Bitcoin. So we will roll that before we get into Charlie.
You made reference to Bitcoin, and I thought I heard a little bit of condescension that people are buying Bitcoin and these things.
But doesn't it? Charlie Munger, this is 2 or 3 years before he died, Charlie Munger attacked Bitcoin. He called it evil, in part because it would begin to undermine the Fed's ability to manage the economy.
Or it could provide market discipline, or it could tell the world that things need to be fixed.
Bitcoin does not make you nervous.
Bitcoin does not make me nervous. I can hearken back to a dinner I had here in 2011 with someone who is another guest on your show. I won't say his name. Okay, I just did Mark Andreessen, who showed me the white paper. That was the original white paper. I wish I had understood as clearly as he did how transformative Bitcoin and this new technology would be. Bitcoin doesn't trouble me. I think of it as an important asset that can help inform policymakers when they're doing things right and wrong. It is not a substitute to the dollar. I think it can often be a very good policeman for policy. And if I were to speak more broadly to what did Charlie Munger and others perhaps have in mind, there is a proliferation of securities that go under all sorts of names. Many, if not most of them, are not worth what they might be being traded for. So what did Charlie say, and maybe his pal Warren say? There's the innovators, the imitators, and the incompetents. They're real innovators that are happening in and around that new technology. And what I would try to impart towards businesses and bankers is that the underlying technology that Mark showed me in that white paper, or tried to show me in that white paper, it's just software. It's just the newest, coolest software that will provide us an ability to do things that we could never have done before. Can the software be used for good and evil? Yes, both, like all software. Right. So I don't cast aspersions like that. If there's a final point, it's these technologies are being built here. I don't just mean on Stanford campus. I believe in the United States. And the world's most talented engineers from China and Europe and everywhere, they come to the United States even now to try to build this stuff. And my view is by building it here, that gives us an opportunity to be more productive and create something very special over the next decade.
A lot of takes, in there.
A lot of takes. Well, he sounds pretty, let's say pro Bitcoin. At least he's pro tech, right?
Yeah, I think he's come across, and I think this is maybe part of my perception of like the rebrand, as more pro innovation and pro tech than other Fed chairs would likely be. He's obviously on the younger side, which I think is for a Fed chair, which is probably good for someone embracing this type of technology. And then he mentioned, of course, the affiliation with Stanford. So he's been a visiting fellow, I believe, at Stanford for a while. He's like a Harvard JD, so obviously a pretty brilliant guy. He was also pretty heavily involved, from what I understand, in the resolution or the quantitative easing and sort of building of the Fed balance sheet after the financial crisis in 2008. He was very against kind of really loose Fed policy at that time. And I don't know that thesis kind of totally played out, that maybe there would be this hyperinflation that he was anticipating after the financial crisis. I know that was a big point that others have brought up. So it'll be interesting to see how Bitcoin fits into the U.S. balance sheet, right? We actually talked last week about Bitcoin as a reserve asset actually needs a lot more traction on like the sovereign side and the reserve side to get the kind of the same sort of market dynamics as gold. So if part of him becoming chair is Bitcoin becoming a more risk-off asset, then that's definitely interesting for crypto. But there's a lot to kind of play out there.
Definitely. And he seems to be more on board with Bitcoin, at least more than anything else. I think you heard him say there's proliferations of Bitcoin that, may or may not be worth the money that they're printed on, or the, the words that they're described as. But he's actually argued that many private crypto projects in the past have been fraudulent and worthless. And he's also said that cryptocurrency was a misnomer because it was software, not money. So definitely, like I said, he's more in tune with the tech, I think, than, it being more of a like a currency or a money. But to your point, it'll be interesting to see where Bitcoin fits within sort of the overall like ecosystem of, how is this going to impact the strategic Bitcoin reserve, for example? Like what his take's going to be on that will be interesting.
Yeah, and then I think just on that note of the currency thing, like he's not wrong there, right? But I don't know if we have it. I know he also has had opinions before on like the CBDC argument. Yeah, I think there was a Wall Street Journal op-ed that he published in 2022.
Yeah.
Basically, yeah, there you go. And so again, this is something that I think the industry has embraced. We've seen Genius pass. We've seen, I think, these arguments made around private companies being some of the largest holders of treasuries. So yeah, and then of course we've heard, Bo Hines, who we'll talk to next week, talk about sort of projecting dollar dominance through stable coins. So it'll also be interesting to see how the Fed, maybe we'll get more master accounts. That would be an interesting implication of this if we're actually have a Fed chair that's aligned with kind of the digitization, the true digitization, and bringing the dollar on crypto rails. So
that's true. That's true. I wonder how Fed Governor Waller is feeling today.
I'm sure he's cold. That's probably
physically cold. Yes.
Yeah.
DC, yes. But no, I think he, when we spoke to him in our interview, he said, if the president wants it, I'll take it. But I think he likes his position as well, just being a Fed governor as well. He seems to enjoy his job. And he's also leading the charge here on those Fed master accounts that you mentioned, skinny master accounts, which we should be, perhaps seeing some action on in the next, few weeks or so. They rolled out the guidelines for comment, I believe. So we should be able to, maybe be getting some of those public comments back, within, I think they want to implement those rules at the end of this year. So I'll be interested to see what happens there.
I just wanted to add, just on that point, it'll be interesting, thinking in the context of the SEC-CFTC event yesterday, to see such a dynamic, proactive embrace of this technology by the SEC and CFTC. I know the Fed often takes a very neutral or kind of anachronistic approach to technology and remains incredibly independent. It'll be interesting to see if he does get confirmed, whether or not we see a much more dedicated push into new technology and the Fed being more aligned with what we've seen as some of the White House's broader agendas. I know that, just going back to this, he's kind of I think I heard a quote on Bloomberg this morning that he was he would have been a great Mitt Romney Fed chair. Right. And who is obviously no longer in Congress, and many of his colleagues who share that sort of a rhino, pejorative designation are also not there anymore. So it'd be really interesting to see if Warsh as a Fed chair embraces these broader agendas, which I think are probably part of the job description at this point. And there's some who are kind of worried about that from a macro perspective, just as far as Fed independence. But if we got some super bullish news from a Fed chair, I think that would obviously have a pretty dramatic effect on markets. So that could be interesting.
Definitely. It'll be interesting to see as well. He also backed CBDCs over stablecoins, right, as you mentioned. And then he also apparently criticized the Biden administration for promoting stablecoins. So the Trump family has obviously since launched their own stablecoin in the meantime. So we'll see how that relationship between Warsh and President Trump, obviously it's it seems pretty positive right now. President Trump has just been going on a Truth Social. He posted like a 2-paragraph praise of him when he announced his nomination this morning, calling him out of central casting, of course,
Yeah.
right? That's President Trump's favorite line. So we'll see how they actually get on in real life there. But yeah, that central casting line did make me giggle a little bit.
Yeah, no, it's a fun, that's entertainment, right? Yeah, so it's a really interesting pick. I think you usually expect the Fed chair to be pretty quiet, because they're basically everything they say moves markets. And we've seen just a whipsaw over the last year on the policy side, whether it's announcing tariffs. Oh, I do actually have okay, so I did a bit of a deep dive this morning. So there's also speculation about the relationship between Kevin Warsh's father-in-law and Trump. And
Okay.
so this is totally not source, not big J journalism, but I did see something that said that his father-in-law was one of the guys who was advocating for taking Greenland.
Oh,
And so that was like that was like a
bring
very
up the list a bit.
I know it does sound like I believe his father-in-law is the chair emeritus of Estee Lauder. And so
I have heard that. Yes,
is a big kind of New York guy. And
Yeah.
so yeah, it would be really interesting to see sort of how all that fits together. I know, central casting, we are living in somewhat of a movie. There's a debate what type of movie, but some kind of a theatrical production here. So it'll be interesting to see how the Fed fits into that.
Oh, that's so funny. Well, let's go back to CFTC, SEC, because I'm curious to get your take on some of the more drill downs on what Chairman Seelig came out with in
Yeah.
his speech yesterday. Gerald, I know you're in the audience. First of all, that was a fun fireside. I enjoyed
Yeah,
chatting.
that was super cool. Yeah.
Really fun. But yeah, I feel like when we're gonna have Caroline Pham on, hopefully in a couple of minutes, as well as Charlie. We're gonna try and get them both in. But
Rapid fire. Yeah.
I think rapid fire, right? But I think Chair Seelig also alluded to being able to work off some of those initiatives that Caroline Pham set up when she was acting chair last year. He mentioned the advisory committee. He's working on adding some CEOs there, which will play a big role in helping kind of get a more of a handle on some of this new technology. I feel like the agencies really are much more so in this administration than the last, collaborating so much more with industry here. But I feel like that's needed because with this technology, with crypto, with prediction markets, it's just like there's like so much expertise like outside of industry, and like that collaboration is just needed. And I feel like this administration is really sort of leaning into that, where the prior one really did not.
Yeah, and I think historically the larger financial institutions, so we've talked a lot about like the traditional exchanges, clearinghouses, broker dealers, ATSs, all that, and banks, of course, being very familiar with how to work with these agencies. And so the industry in the last year has kind of had to get its feet under itself in how it proactively engages. Like, we've talked before on the show about crypto not being a monolith. But with all that in mind, it is pretty exciting to see in the first real public remarks by a confirmed, CFTC chair tackling prediction markets. I know he had some really exciting comments about onshoring perpetual derivatives futures, which is like something I definitely did not think that the CFTC chair would be coming out on sort of day one, so to speak, talking about. But yeah, this. Trying to remember the exact quote from Atkins, but it was basically that this turf war was over, right? And so, again, this goes back to the question of Miles about like how reversible is all of this. But if the SEC and the CFTC are working together really closely over the next 2 or 3 years, there's obviously a lot. Well, 5 technically, right? But we can get a lot done. So that's very exciting too. How was it for you moderating a regulatory event? Like, I know you're speaking all the time. You're the moderator extraordinaire, but was there anything different about like that setting for you?
No, I actually, well, first of all, I've never been to the CFTC, so that was a first for me being in that building. I've been to the SEC a lot, and actually, I learned an interesting tidbit. That room that we were in yesterday was kind of like it's a really nice sort of like grand room, right? High ceilings, like beautiful lighting. Gary Gensler was the one who commissioned that room. It used to be sort of like an old, just like, boardroom that they never used. And Gary's like, we need a nice room for events. And so someone was telling me that Gary commissioned that room. I'm like, oh, well, crypto can thank him for that, I guess.
Yeah, that actually makes a lot of sense. So that it's funny. I didn't know that, but one of the things that struck me is how high the podiums were. Like they're not podiums, but the seats in that room were.
There was a court. They remind me of
yeah, it was like a high court. And so like you see like in the SEC where they hold these events, it's like sort of just desks, and then like the audience is kind of maybe at eye level with a lot of the folks who are on stage. So it actually does make a lot of sense that Gary needed somewhere to look down on the people from his high chair up there. That makes a lot of sense.
That's so funny. Well, we are joined now by Caroline Pham. We're very excited to have her back. She is MoonPay's Chief Legal Officer and Chief Administrative Officer, and she was, until very recently, also the acting chair of the CFTC. And so she's perfect to come in at this point, so she can tell us all about that room we were just discussing. Caroline, welcome back to the show. We're so happy to have you back on.
Oh, thank you so much for having me on. It's a really exciting time.
It is. So what was your biggest takeaway from yesterday? I feel like there was so much news, right? We could talk about the Senate Ag markup. We can talk about the joint initiative between the two agencies. But let's start with that, with the CFTC joining forces with the SEC, because I feel like you really had a hand in setting this whole thing up, really.
Well, thank you so much. That means a lot to me. And actually, it was incredibly humbling. And I was super grateful to hear both Chairman Seelig and Chairman Atkins give a little shout out for Crypto Sprint and a lot of the work that we did last year to just lay the foundation, really, for just hitting the ground running in 2026 and just wasting no time in moving forward to codify all of these initiatives. And I think that is, one of the biggest takeaways from yesterday, as you pointed out, is just this incredible momentum that we have in Washington, right? You've got Senate Ag Committee passing their markup, and it's got a lot of great provisions in there that are now more right-sized, reflects a lot of the technical assistance that we had provided all throughout last year to both the Senate and the House. And then, of course, I know there was a big push over the last couple months to really hammer in and get those details right. So a lot of tremendous work being done by the agencies and by other constituents. And then, of course, to have this incredible, joint harmonization event at the CFTC yesterday. So it was nice to be able to kind of show off the CFTC's headquarters. Yes, it is a big dais that the commissioners sit on. And it is actually, it is patterned after a court, because one of the things, as I think everybody's well aware of, is that the CFTC doesn't just do rules, we do enforcement actions. And so when we are ruling on enforcement actions, we're actually using our quasi-judicial authority. So little fun fact for you, a little trivia there.
Yeah, I love that. And so, Caroline, one of the things that we asked you about when you were on with us previously, and I'm curious about your take on, is I heard a lot of comments from Chair Seelig about getting sort of the office in order and then working with whoever was kind of around the table. And so talking about directing the office to pick up a lot of initiatives, do a lot of work, just sort of keeping the ball rolling. But there's also this issue of absent other nominees, right, to fill out the rest of the commission. Do you think that we will see movement on that front going forward, or are you optimistic that we'll have a more full CFTC commission, so to speak? And how does that fit into rolling out all these plans?
Sure. So I know there's a lot of conversations that are going on, and so I don't want to get in front of a lot of those productive conversations about having more commissioners at the agency. But I do want to maybe clear up some misconceptions and then just provide some really concrete examples from just last year, right? And over time. So the CFTC, of course, has the 5 commissioners, right? And then one of those commissioners is the chairman. The chairman, you can think of the chairman as like a chairman CEO. It's the chief executive of the agency. They actually have all of the authority to direct the agency. The other commissioners are like independent board directors. They have no management responsibilities. They don't actually direct or manage any of the work of the agency at all. And, that's been it's in the statute, and it's very clear over time that the commissioners do not participate in the management of the agency. It's only the chairman that can do that. So a lot of times people are saying that there needs to be more commissioners to share in the work. And that's just not how the agency is set up, right? Those are independent board directors. They do not do any management responsibilities. So that's like a fallacy I just want to point out. Now, of course, it's great to have more commissioners because then you, of course, have more dialogue. You can have more engagement, certainly. But the other thing I want to point out from last year is when we had, gridlock, right? Only 2 commissioners, I could not get anything done. Even something as simple as reopening a comment period for prediction markets to let the whole, like all the public, everybody in the public provide feedback, that got blocked by my fellow commissioner. And that is, and I've said this before, that's wild to me that you would block the public from being able to comment on something. And so if you can imagine that something is non-controversial as having a comment period would get blocked, I couldn't do any enforcement actions. The enforcement actions that I had ready to go, settlements that were ready to go, weren't getting voted on either. And so I do think that some of these proposals that would actually codify gridlock without having a majority, right? If you have 4 commissioners, that's gridlock. I just think that needs to be very carefully thought through.
Caroline, we heard obviously the theme of yesterday was harmonization, and both Chairman Selig and Chairman Atkins said that they were going to make Project Crypto a joint agency effort. But I did ask the question, and as you know, obviously very well, SEC and CFTC still have very different statutory mandates. So I'm curious, what is the biggest takeaway, do you think, like for consumers, like when they harmonize, what is the biggest thing that what's the biggest benefit consumers are going to have out of these 2 agencies working more closely together? Because like the rules are never going to be exactly the same, but like what is going to be the biggest change and the biggest benefit here?
Yeah, I think what is so great about Project Crypto now becoming a joint agency effort, right? And that just sort of the natural building on of what happened last year when it was so important to hurry up and make sure that we stopped the regulation by enforcement and we reversed some of the very damaging precedents that were created through these regulation by enforcement cases. But now what you have is a formalized framework for the agencies to do basically coordinated and harmonized rulemaking, right? So everybody is talking about, and I think I just heard you mention that some of the earlier guests were talking about how do you make sure that this is future-proofed? Well, you've heard Chairman Atkins and Chairman Selig say repeatedly that the point is to future-proof these regulations so we can have stability and certainty. And the fact of the matter is that it takes a long time to do rules. It would typically take probably, it could be a year, it could be 18 months, it could be 2 years to engage in the full rulemaking process. But that means if you want to change that rule, you have to go through the full process again. That's the Administrative Procedure Act. So it would be like 2 years to undo or change rules, right? And there's a whole lot that can happen in those 2 years to make sure that we aren't doing any kind of backsliding or that we aren't having a rollback on regulatory clarity. So I think having the formal framework through Project Crypto to harmonize on the definitions, on a substitute compliance framework, that's actually what's going to make the biggest difference for consumers, is that there's going to be bright lines between, okay, this goes in the CFTC lane, and then this one goes in the SEC lane. And if you're registered this way with one of the agencies, then you can comply with those rules and not have to have duplicate compliance requirements or dual registrations that might slow down bringing some of the regulatory clarity into effect.
Yeah, Carolina, on that note, I'd love from where you sit now to get your perspective on some of the things that the industry has been flagging about the time period for rulemaking if clarity does pass. So I know, I believe, and you'll correct me where I'm wrong, but I believe it's 360 days that they would have to actually get, is it proposals in place or to actually get rules promulgated from the agencies once we have clarity? Do you think that timeline is really ambitious given your familiarity with like how slow some of these rulemaking processes could be? Or what's your perspective on sort of the timing post clarity, fingers crossed, that the agencies will have to actually get some of these rules together?
Sure. I mean, look, you can have statutory deadlines. The fact of the matter is that statutory deadlines do get blown through. I mean, the Dodd-Frank Act had a statutory deadline of like 365 days from the effective date for the agencies to complete the rules. And the SEC actually did not complete its Dodd-Frank rulemaking for about almost 15 years after the Dodd-Frank Act passed, right? So I want people just to understand that you can have rules on the books or laws on the books, and the agencies can still ignore it, which was clearly what happened during the last administration, where they just ignored the laws and the rules that we already had that were existing. I think, again, speed is of the essence. It does take a long time to follow all of the appropriate procedures to make the rules so that way they are future-proofed. And not only that, but that they're resistant to litigation challenges, right? So that's the other thing, right? People are going to try to challenge this in the courts, and by having a really robust rulemaking process, you have the data, you have public input, you craft good, thoughtful rules, and then those will stand up in court when they get challenged. It is totally possible, but that's why it's so important that they get started now. Like, that's what I think was really great about the Project Crypto Initiative, is that it is building upon the work that was done last year. And actually not even just last year, right? My digital asset market subcommittee of the Global Markets Advisory Committee that I sponsored first released a token taxonomy for the United States, the first ever one, in November of 2024. And then you see that the SEC issued a token taxonomy last year. And then now the SEC and the CFTC are going to work together in a coordinated way to codify that into rules. And so I think it just shows that good policy is hard work, but that's why you have to keep up the momentum and you have to get to work right now, and you can't wait to see what happens and then start later, right? Because you're just going to be constantly losing time.
Caroline, before we let you go, I got to get your take on Senate Ag passing clarity out of committee yesterday. No Dems were on board. Do you think this is a bad omen for Senate banking getting Dem buy-in on their side?
No, look, everybody's working very hard. I think everybody is really wanting to get to that outcome, which is to have clear, strong legal and regulatory frameworks in place to make sure that America is at the forefront of innovation. So I think everyone's working very hard to get there, but there is kind of a question about how much time is left in the congressional calendar. And so we'll see that play out.
Got it. Caroline, thanks so much for joining us again. We'll have you back soon.
Great. Thank you. Thanks so much.
Yeah.
All righty. Well, to close us out today, we're going to have a very special guest, at least a very special guest to me, Fox Business senior correspondent Charlie Gasparino is going to join us to discuss Trump's pick for Federal Reserve Chair. Charlie, Warsh seemed to be the name on everyone's mind early back when they were floating his name for Treasury Secretary. Oh, there you are. Hello.
Hey, welcome.
How's it going?
Long night last night because I think I tied Bloomberg, essentially breaking the story.
Yeah.
Tied Bloomberg. Yeah, that's. I know Eleanor is very particular about her scoops. Did she get that from you?
So, but, I might have had it first on the web, so I was up all night. I was late writing. So sorry for my voice. Listen, I don't know if you caught this, but about a month and a half ago, I did a story. I did a very long tweet, then I wrote a story about how there was these CEOs that were pressuring Trump not to pick Kevin Hassan as his Fed chair. Basically said the guy is, too much of a, too biased, shows a lack of independence since he was such a cheerleader for Trump's policies. Kevin, as you know, he's the NEC chair, NEC chief, National Economics Council. It's part of his job is to be a cheerleader, by the way. But it was just unbecoming to flick him in something like the Fed, that you want some degree of independence. Now, why do you want a degree of independence? Because the Fed is the central bank. Yes, it's appointed by the president, the Fed chair. Runs, I think, 4-year terms, approved by Congress. But it's generally an independent agency where it has a dual mandate of keeping inflation low within the context of excellent employment. And inflation is key, because if you have a guy in there that doesn't want to, that refuses, that's on the phone with the president, and the president says inflate the economy, who cares about inflation, rev up the economy, the guy just does it by cutting rates, nobody's going to buy your debt, because bonds erode in value, income investments, they erode in value when there's rampant inflation. And and that's something, if you're running a $2 trillion budget deficit, you need people to keep buying our debt. So that did happen, and it did have an impact. You could tell Trump was backing off Hassan after essentially embracing him, slowly but surely backing off. And And so then it becomes like, who would you pick? And other names came up, Rick Reeder of BlackRock. There was a Fed governor, I can't remember his name floated. But really, it was at that point, Warsh was at least tied, or a little bit in the pole position to get it, because in Warsh, you both have an inflation hawk, and this is kind of key. And some of that will cut short-term rates. You see, if you talk to people, I don't understand why Trump is so obsessed with cutting the Fed funds rate. When it really comes down to it, if you want to jazz the economy significantly, inflate the economy, you print money.
Run it hot, right? Yeah.
Fed funds rate is not a heavy hammer to run in. The consumer rates are pegged off. Want lower rates? They're pegged off the 10-year bond, essentially. If you want lower mortgage rates, you got to get the 10-year bond. How do you do that? One way you do that is to deal with inflation. So it's almost counterproductive. I think what Warsh understands. I think he'll do this to keep Trump kind of quiet, because the president for all the Fed does have a really cold. He's going to lower short-term rates pretty fast when he gets in there. He's also going to unwind the Fed's balance sheet, which controls a lot of debt, way too much. You buy the debt is the way. That's how you print money. You buy debt from banks. Banks get money. That's how money supply increases. I think what he's going to do is the opposite of that. He's going to sell debt, the Fed's balance sheet. Not fast, nothing that destroys the economy, but he's going to unwind it methodically, and that'll keep the 10 years stable, or maybe hopefully bring it lower. And I think that's going to be his modus operandi, because he is at heart with inflation. People are like sitting around saying, "Oh, why did he pick an inflation on?" By the way, he needed to, because people wouldn't buy our debt if he had any of the other choices. Probably choices that might be too political, or seem to be lack of independence. Clearly, Hassan was the one that was likely to get it, but he just had that rep. And so, my view is this is a good choice. That I know I see the stock market's off because he's a hawk and he might not lower rates. He is going to lower rates, but he is a hawk, and we should point out, stock market has made amazing gains. Where this country is in real trouble is in affordability. Inflation. The inflation rate has come down, not to the target. It's still at 2.7%, but prices remain elevated, and knows that. And inflation is a tax on the working class. Rich people can speculate around it through crypto, to, whatever, stocks, Nvidia, you name it.
Charlie, I know you've met Kevin Warsh. I believe you've got like at least you've met him a few times.
I know him for decades.
Not for decades.
I covered Kevin when he was a Fed governor during the financial crisis. So I know.
What do you think he's going to do for crypto and digital assets? Do you feel like he's a tech forward guy? Are we going to see we're going to see Bitcoin be the reserve currency of the United States, or are we not going to go that far?
Well, and I think just a broader part of that question is I wanted to ask, what does this do for like the debasement trade, right? Like, do you think that continues? So I guess there's a two-parter there, but yeah.
Play the debasement trade.
The U.S. assets are being sold off globally, and the dollar is weakening, and so that's a part of this cycle.
Right. Part of that is because people are buying gold. Ironically, they're not buying Bitcoin; they're buying gold. Listen, I don't think he'll do stuff. I mean, he's a strict. You know how you say strict constitutionalist when it comes to the Supreme Court? People that believe, like Anthony Scalia. What did the founders say when they wrote this document? What does the Constitution mean? Not what we interpret it to mean. Not what we interpret it to imprisonment or modernity doesn't mean. But what does it actually mean? Because they set up a pretty cool thing with these checks and balances, so you pay deference to the Constitution. My guess is Kevin Warsh pays deference to the founding principles of the Fed. The Fed will be a central bank with a dual mission of inflation first, but within the context of full employment. You don't sacrifice inflation for full employment. You try to aim at full employment as you deal with inflation. because there's something important about the sanctity of what our currency is worth. I think when you go back to those basics, those fundamental principles, I think the debasement trade kind of handles itself in many respects. By the way, there's a lot of stuff that's causing the debasement trade outside of monetary policy, right? Plays a role in this. Global instability here in the U.S. and perceived instability, maybe inflation, which remains above the target. But I think net having a Fed chair that believes in the fundamentals of the Fed. First priorities of the Fed being those two, that dual mandate, and not getting involved in the ESG and all this crazy stuff. I think deals with the debasement of the trade. As far as crypto is concerned, I've never had a conversation with him on crypto. I doubt he goes out on the limb on crypto, just because I just don't think it's his mandate to do that. I mean, if policymakers want to, if the Treasury wants to hoard crypto, that's their business. I don't think he believes it's the Fed's mandate to be venturing out into the crypto market. So,
crypto industry was excited at the prospect of perhaps Christopher Waller becoming Fed chair because he's been very behind.
That was the Fed. Yeah. That was the Fed governor that slipped my mind. Yeah, this is not. That's not what he's about. Meeting Warsh. He's about first principles. What does the Fed do? What was it created to do? How do we get back to that? And I think that's a good thing. I really think here's what I would tell you. Of all the things that destroy societies, inflation kind of does it faster. I mean, we survived through the Great Depression. We survived as an intact country. It was difficult. My father grew up during it. My mother did as well. It was horrible. But we survived, and then we fought World War II, united. And we basically saved the world from Nazi Germany. I remember the 70s when we had rampant inflation. Literally, the nation was coming apart at its seams. There's something about not being, even working, and not being able to afford certain things like food and gas that tears nations apart. And I think Kevin Warsh appreciates that. Listen, Donald Trump, warts and all, beat Joe Biden, would have beaten Joe Biden, and beat Kamala Harris because they presided over some of the largest bouts of inflation, of unaffordability that this nation has seen since the 70s. So, I think Kevin understands that, and that's what's good about him. Now, will Trump leave him alone? I mean, it's going to be an interesting balancing act for him. But again, Trump does get his short-term rates down. Kevin's going to unwind the balance sheet. I mean, in many ways, he gets his cake and eat it too. I just wonder, why isn't Scott Bessent telling Trump that this is where it gets even more sort of weird? Short-term rates don't matter that much. You got to worry about the 10-year. I heard Scott Bessent say that once, when he was Treasury Secretary, but Trump never accepted it as conventional wisdom. So,
what's funny, Charlie? I remember, so I feel like Trump wants Bessent in all the roles, right? Because I remember when we were trying to figure out who was going to be Treasury Secretary, Kevin Warsh's name came up. This is around the time when you were reporting on the battle between Lutnick and Bessent. And now, Bessent's name is up for Fed Reserve Chair, and now it's Kevin Warsh. Bessent's always around all these top names. I feel like Trump just wants him to be everywhere all at once.
Trump obviously likes the guy. I mean, he's very. But listen, we have a kind of an A+ economic team, with the Trump administration. I think. I mean, if you think about the people in these sort of key positions, Paul Atkins couldn't get a better SEC chair. He understands how far to go, how far not to go on a lot of issues. He's not going to regulate the place, Wall Street to death. Obviously, he's given crypto room to grow.
The minimum dose of effective regulation is what both chairmen told me yesterday, Charlie.
FTC and the SEC chair.
Yeah,
that's what you want. You have that in Bessent. Sharp guy, understands global currency flows well as anybody. We now have an A+ Fed chair. I mean, people forget Jerome Powell inflated this economy in ways that was, I mean, inflation of 9% under Biden was caused largely by two forces, and they worked hand in hand. And Powell should have known better. A good Fed chair would have known better. We had massively expansionary fiscal policy, trillions upon trillions of spending, even after COVID lockdowns were over. I mean, the economy was open up and they were still spending. It was nuts. I mean, it was designed to bring sort of a socialist agenda. It was obviously a political ploy to remake the country, not to fix the economy, because obviously that spurs inflation. And then you had, hand in hand, Jerome Powell keeping interest rates at zero way after the fact. And then everybody lied about inflation, calling it transitory, and then it wasn't. So, he doesn't, Trump is beating him up for not lowering rates now, but, his record is impossible to defend, if you look back. And I one thing I do know is that along the way, Kevin Warsh was critiquing every jot and every dot, everything along the way. And so he knows the policy mistakes, understands the policy mistakes of someone like Powell. And I don't think he'll repeat those.
Gotcha. Charlie, thank you so much for joining us. Great discussion. We'll have you back.
All right. Talk to you soon.
I appreciate it. Thank you.
Bye. He is like a fountain of knowledge.
I love that. I for one appreciate him taking the time before he had to hop on that private jet that was obviously idling right off screen. I really appreciate it.
I know.
Yeah.
Love it. All right. Well, great show, Gerald. And maybe we'll be doing the show. Well, I was gonna say live from Hong Kong, not next week. We'll be in Hong Kong the week after.
Maybe from Durham.
Maybe from Durham.
Yeah. Maybe from Durham. Yeah.
Cool.
Nice,
well, we'll see if we can all get back together next week, 3 of us. But in the meantime, see you then and have a good weekend.
Great week.
Bye.